Steve Lundstrom. I've been using SectorSurfer for almost a year and a half now, I guess. Those of you that know me, I'm like a number of other of us here. I'm an analytic person, like to dig in and try to see how things work and how I can take advantage of things. So one of the things that I've been curious about for a long time in a lot of different contexts is what do we do with old favorites? You know, newsletters that we subscribed to for years that we're comfortable with and we know something about what they do, scanners that we might have access to, wizards that we might have access to, and so forth. And these often have a different point of view than just SectorSurfer by itself. SectorSurfer by itself is something that tries to help you choose what's next in favor, but it doesn't spend a lot of time in terms of emphasis on fundamentals or particular timing mechanisms that you might be interested in, or technical analysis, and so forth. So the question that I've been experimenting with is, could we apply SectorSurfer on top of the information we get from newsletters or scanners or whatever we have access to? So that's the point of what I've got tonight. So this is the bottom line. Go ahead, Joe, please. So some of the... Go ahead, Joe.
You might need to do a page down or something, or else click this thing up here.
Yeah, that down arrow in the upper left.
This one here?
No. One, yeah, that one.
Okay.
Sorry.
So I've got a number of experiments that I'm in the middle of. Some of you probably have heard of. Bob Rinker's a Sunday radio and has a newsletter that I used to use his newsletter a long time ago. John Markman is a columnist and an early inventor of scanners that were available on the internet, a publisher. One of the things that he has in a service called Strategic Advantage is something called Monthly Stratagem. And the Monthly Stratagem, every month, in time to trade the last day of the month or the first day of the month, he issues 10 new stocks. So every month you got 10 more, which is sort of handy for SectorSurfer since it fits the strategy size of maximum of 12. And it happens that the new list comes out just when SectorSurfer would normally be issuing a new set. Okay, thank you. We heard about CycleProfit for the first time, some of us at SVOG, Silicon Valley Options Group, last fall, and that's got an interesting portfolio. That one has weekly trade signals, but we have, in both case, monthly stratagem case, and in this CycleProfit case, we have detailed information about every trade that went on. In the case of CycleProfit, we have it for 2013. In the case of the stratagem, I have the data all the way back to 2009. So I have a lot of data. Then there are some other things, Louis Navellier's blue chip growth portfolios, I have access to that information. There's a software package from Best Choice Software, which lets you find through a wizard a list of equities which have been known to have gained in price during a particular time period, say from January 15th to February 15th, every year for the last 10 years, or whatever percentage of time that you want. So one of the things that will be interesting to me, I'm going to run some experiments with those wizards to see if, if I've given a list that I come out of there, can we productively choose one thing with SectorSurfer? So that sort of gives you a hint of what I'm at. So the next slide is simply the warning that don't trust what I said at all. Just use it as motivation to go try it yourself and see what happens. Okay, so my basic experiment is start with the known trades, and then so I have what the equities are, the fill and close prices, and the dates. And then what I try to do is when I do the SectorSurfer model is first of all I'll set up the start date of the strategy or the portfolio to be prior to the known trades. And then I enter the initial equities from up here into the SectorSurfer strategy, and then check the holdings list to see what SectorSurfer chose at that time period. And I enter that into an Excel spreadsheet. But I use the prices, use the same prices in the SectorSurfer model that I've got as the fill and close prices that I've got from the original model. Or else, you know, if it turns out the time's different, then I have to go look it up. And then whenever the strategy up here in the original known trades change, then I make a change in the SectorSurfer strategy and go back into holdings and look at the next time period, which is what we're talking about. So the next slide is just simply some snapshots from the SectorSurfer pages, which those of you that have watched SectorSurfer recognize these. Here's where we enter the symbols for the strategy we're interested in. And then if we choose the I for information, we get this and choose the advanced group. And down here we choose forward log and the born on date to be before the information that we're trying to compare, so that we have a reasonable comparison in the step forward of the model. In the I don't know, Al, I think that's basically the only thing that I extended, so I don't know if there's anything that really is necessary to try, but that would seem to be the simplest type of study. Okay, next is what we get when we choose the holdings. And so, you know, for example, here's where we are now, but the thing that I'm doing is I'm entering all of the equities when we're given a new set on April 1st, okay, let's say for example, and the SectorSurfer then goes through and gives us all of this, assuming that was the strategy for all time, but what I'm interested in is what they were saying we should do on April 1st. And then, you know, I'll enter that information on April 1st in my spreadsheet, and then I wait until the particular portfolio that I'm studying, when is the next active time that they sold something or they bought something, and I'll enter that information again, and then we look to see when, you know, there'll be some different equities listed here, and I put those into the spreadsheet. So that's the process I went through.
Question?
Yeah.
So I guess I'm a bit mixed up. You've got 12 tickers in the strategy for SectorSurfer.
Right.
Where do all the tickers come from?
Okay, the tickers come from, well, in the case, for example, of Markman's stratagem model, he publishes on the last day of the month, last trading day of the month, a new set of 10 equities for his portfolio. And if you follow what he does, you would normally put equal dollar amounts into those 10. You'd sell the previous month's 10, and you buy that set of 10 for the next month. Okay, those are the 10 that I put in the SectorSurfer strategy Right, so I went all the way back to beginning of 2009, and I did this for every month, all the way through by hand. And by this thing here, remember I'm going to be going way back in, I didn't include everything here, of course, but there'll be like in March 1st, 2009, there'll be in April 1st, 2009, and so forth. And what I'm trying to see is whether or not the SectorSurfer choices would make it advantageous to only make one trade a month.
So you're saying, what if I bought the best one according to
Right.
SectorSurfer every month? How would
Right.
I have done? Okay.
So I have, on the one hand, I have the original details that Markman publishes, which is everything that went on in his portfolio from early January 2009. And then I've got a spreadsheet that says, well, if we chose the stock that SectorSurfer said is best on each of these dates, and I'm assuming the same purchase and sale prices that Markman had, so that I'm not screwing things up, and then I compare those. So Joe, if we go to the next.
Thank you.
So this is, if you're interested in seeing all of what he has, that's how you get to him. And I've said all of this already, so let's go ahead to the next.
Okay.
All right, and this is the kind of information that's on the website. So like this is for January. Here's the 10 stocks, their symbols. And this is what we get. That's current information. And then the next slide, here's the information that I had from 2009 to now, and it comes in sort of a summary form. So here's for each month, it tells what the percentage change was, total percent, and so forth. So I have it by year, by month, and then move ahead to the next one, and then it turns out here's an example of the detail for one of the months. So like here's April 11th and here's May 11th. So I have each specific equity that was traded, and I know what the total change was. So like one of the things that was interesting to me in this part of the experiment was to compare the gain that occurred by the choice that SectorSurfer made, and to see if that was the best one of the month or not. So that turned out to be an interesting thing to look at. Okay, so here's my summary. This is percent change, percent winners, drawdown, the number of months SectorSurfer was in cash, number of months where the SectorSurfer choice equaled the maximum stratagem choice. And in these little squares, the upper left corner is what stratagem did by itself, and the lower right corner is what it did with SectorSurfer. So you can see here that this was not, in some cases, SectorSurfer wasn't as good, and in some cases it was better. So this one goes across, so you can see, varies. Here it's the other way. Here's stratagem was better. In 2013, the SectorSurfer choices were better. And percentage of winners, they're all pretty good, except in 2011 was when there was a period of time when the market was down. The drawdowns weren't bad in either case. So that's a quick picture of that particular study. So let's move on. CycleProfit is, the thing I didn't mention is Markman's stratagem thing is a proprietary scanner. I don't know the parameters that he uses. And CycleProfit is very much a rules-based investing thing, where he has a lot of rules about what the industry is doing, the sectors are doing, individual stocks, both fundamentally and technically. And so, as an example, they issue a thing they call the Signal Investor Portfolio, where they can hold up to 20 or a few more than 20 stocks. They suggest investing no more than 5% of the portfolio total value in any one equity, so that you hold cash quite a bit of the time. But again, I have a lot of detailed data. So if you go to the next slide. So we have a detailed log of all 2013 trades. And so in this case, trades can actually occur any time. They issue a recommendation of what to purchase at the next month weekly, and they give you a target of how much to pay for and that sort of thing. But the point at which trades actually occur can be at any time, so it can be any date. So what I did here was whichever date a trade occurred on, I changed the number of the stocks that were in the strategy. Also, I did this before the strategy of strategies was released at the end of December. So I had, in some cases, when there were more than 12 stocks in the CycleProfit portfolio, I had to choose which 12 were going to go in there. And I simply did that by looking at charts. The ones that didn't look like they were doing as well, I didn't include. Okay. So this is the kind of data that I have to work with here. We got close dates, ticker, fill date, the basis price, the close price, and gains. And then I added, in order to make this a realistic thing, I actually figured out how many stocks were purchased on each trade in order to make 5% of an initial portfolio. So I assumed a $20,000 investment, and I went through and modeled this, and then I also modeled what would happen with SectorSurfer by itself. Okay, so here's what we got. $20,000 start. In the original portfolio, we ended with 24. Actually, I went through today and double-checked these numbers. The ending was actually a little bit less than this. So the percent gain actually was about 16 or 17% using those trade rules that I mentioned. There were 94 trades, and maximum drawdown was 9.4%. With SectorSurfer, also starting with $20,000, we ended with $32,000, which is 62.7% gain. There were only 14 trades, but there was a bigger maximum drawdown. Okay. So this is one where I'm comfortable, I think, using SectorSurfer, although there's still quite a bit of work involved because you do this every time there's a trade. And the next thing that I'm going to be doing is experimenting with the strategy of strategies, because here we often have 20 to 21 stocks if you're close to being fully invested. And rather than having to manually figure out which stocks to leave out, I can just put them all in and then use the strategy of strategies to figure out which of all those we're going to include. So that's the next experiment here. Okay. So this is next. Use this, and then I'm going to be working on some of these others. And I would encourage anybody else who's already done this sort of thing on their own or interested in it, feed it to Joe, and we'll include it to make it available for everybody to see what kinds of things people have got.
Just out of curiosity, with Bob Brinker's market timer, have you checked his timing versus StormGuard?
Versus
StormGuard, because I know Bob Brinker
no.
goes to cash and
I haven't. We're asking about Bob Brinker's market timer. I have not done that. The current data that I have is compliments of the Burlingame Library, which subscribes to Market Timer, but it only goes back to I think it's March or April last year,
Okay.
2012. So I only have detailed data for the 3 portfolios in Market Timer, and I also have the detailed information for Fixed Income Advisor. I don't think that's going to show anything on StormGuard. The last big StormGuard, I think, was end of 2011, but there was 3 months where things were in cash. But you know, if anybody else subscribes to these things and wants to, you know, pool them together and we can make a bigger model, great.
When you were going through the CycleProfit stuff, you had to sort out some of the equities by inspection.
Right.
Are you going to stop doing that? Because it looked like there was some potential in doing that approach
Well, what
from the results that you were showing.
yeah, my intention is, instead of me manually making a judgment as to which equities are weak, and SectorSurfer would not likely to choose them anyway, which is what I did. Okay, just practical, technical analysis, look at the chart and decide, you know, these things are in a downtrend and they're not likely to turn around and tomorrow will be chosen as the thing to select. So that's what I did, but with the strategy of strategies, I think Phil's going to talk about that a little bit. That's a new feature where I can have, in the case of CycleProfit, I would have 2 strategies. So that together I could have 24 equities. And then a third one called the strategy of strategies, which points to those 2 and will tell me which of those 2 is currently the strongest. And then I can go to which one's the strongest and choose the particular equity that's strongest in that particular one. So it's a tool that I can use to choose one of more than 12 equities. That's my next experiment.
I guess what you could look at too is rather than just picking one stock, you could maybe see what it would be if you picked the top 2 rather than just one.
Yes, we could do that. Okay, I'm not going to spend time going through these. For people who haven't seen CycleProfit, this is just some examples of what you get from them. This is trends on indices, sectors, and so forth. And this shows here, this first is actually supposed to be greenish color, and this is supposed to be reddish color. So it's supposed to say, you know, here's a time period where this particular index is likely to go up. Then there'll be a period when it's likely to be going down, and then a period when it's likely to go up. And one of the things that's interesting about CycleProfit is they use a lot of Fourier analysis, which is the point of these different cycles that are discovered over here. Using Fourier analysis, they've come up with a number of cycles that they use to make their forecasts. And so you get these kinds of charts. So given, you know, here's all these different cycles that are currently going on, and it projects what's the likely direction for a particular equity. That's the forecast model. The backtest model, which is the next chart, lets you, there we go. So in this case, what we've done is, in addition, they did the analysis out here, and then from here on, this shows their forecast coinciding with what actually happened. So you can actually see where you have a close approximation of what was really going on. Okay. And then there's a lot of detail for any one equity that you might be interested in. You don't need to go through the details. I was trying to give people who had never seen it before a sense of what's going on. Okay.
Okay, well, thank you very much, Steve, appreciate it. I think with a new capability that we now have in SectorSurfer called Strategy of Strategies, which we're going to touch on in just a couple of minutes, that you'll be able to use that, and hopefully it'll make your work a lot easier and quicker. So thank you again, Steve, we sure appreciate it. So we're going to take a short break. It'll give us an opportunity to load up the final presentation for this evening. Thank you.